To start off, I will introduce myself. So I'm Mike Hall. I'm the CEO of Paul Fraser Collectibles, and I've been trading in the rare collectibles market for almost a quarter of a century now. And our chairman, Paul Fraser, our namesake, has been doing it for 45 years. So it's safe to say we've been around the block a few times in this market. And interestingly, Paul Fraser was previously owner of the world's most well-known and oldest stamp firm, Stanley Gibbons, and that's where we met, because I was a chartered accountant for PwC, and when he sold his business to another company on the stock market called Flying Brands, I represented the acquiring company and I was doing the due diligence, and we met at that point, and he encouraged me to get involved in the business, predominantly because I wrote a huge report about how terrible the business was, and he thought I should come in and fix it, which was a lot harder than saying how bad it was, which I found out.
You started?
Only just. All I've done is introduce myself and say I'm Mike Hall, CEO. And I've been in the world of collectibles for a long time. It's a shortcut. So, starting off, passion investing. What is passion investing? Well, it's exactly what it sounds like. It is people buying assets predominantly and firstly out of passion and a desire of ownership. The fact that it's an investment that can go up in value is a secondary consideration for the vast majority of people that buy passion investments. That doesn't mean to say that you can't look at this as a hard-nosed investment, as a means of diversifying your wealth, a part of your wealth, into a non-correlating asset. And the first slide, which I did already mention, is the proof that very few people actually do this. A lot of people talk about diversification, a lot of people think they've got diversification, but do you actually have true diversification? Because everything is linked ultimately.
Yes.
I can give you real life experience from my own personal experience. If I go back to 2008, which I don't have to repeat, what happened in 2008, everyone knows exactly what happened in 2008. But my personal experience was I was heavily invested in the stock market at that time, and I lost a lot of money on the stock market like everyone else. My pension went down dramatically. I had a big house in the Channel Islands that I was trying to sell, but I could not sell, the market had frozen. And it was only virtue of what I do for a living that I had a large personal holding of collectibles that anything in my net worth went up that year, and that was the collectibles I owned went up by 26% in 2008 and went on to be my best performing investment for the next 3 years. So today we find ourselves in a similar situation, albeit for entirely different reasons. Now, history doesn't repeat, but it does resonate. So more people are actually looking at passion investments right now. It's part of an investment strategy, and there's a good reason why, and that's because the growth rate is attractive. So last year, the Knight Frank Luxury Investment Index, which tracks the value of 10 investments of passion, such as art, coins, classic cars, wine, whiskey, that rose by 16%. And a lot of that is down to the fact that whilst collectibles aren't correlated with other investments, there is a correlation with inflation, and it has been used predominantly as a hedge against inflation. So people get more attracted to tangible assets in times of high inflation. And these are the considerations that people are having when making the decision to put money into passion investments. And inflation is the biggest one. It's the biggest reason for erosion of wealth right now. And historical proof, as an example, is the Stanley Gibbons GB Rarity Stamp Index went up by 600% between 1975 and 1980, which is the last time we had very high inflation in the UK. And it then followed to not go up very much for the next 5 years, but it did show that during the high inflationary period there was a real a real boom in collectibles. We're actually seeing a lot of clients at the moment coming to us who are so frightened about the world itself that they're buying portable, tangible assets as a protection tool. And there is stories in history of people that have had to flee a war-torn country, and with them they had a book with rare stamps in it, and they went to another country, sold it at auction and started a new life. They had all their assets frozen and lost their house, but all they had to start again with these stamps. And there are some people thinking in that extreme way at the moment. And that's what the portability, the benefit of the portability, it's like an international currency. There are auction houses in every major city in the world that you can convert these tangible assets into cash anywhere, and you can also pick the right currency. If there's a currency crash in one area, you can sell it in another area. So there's a lot more flexibility in how you can realise your investment. The positive element to the market right now is that we're getting this new demographic of younger buyers. I mean, I don't know if you guys have noticed, but there's people in their 20s now that are multi-millionaires, and they did it through crypto. So what I worked all my life for, they've done in minutes, but they do the crypto or the social media influencers and all that sort of stuff, and they've done very well because there's so many more opportunities to make that kind of money now. And during lockdown, there was a renaissance in collecting. The first part of it was our whole market was forced to go online, had no choice. So the online market of trading collectibles become much bigger and much more transparent and much more liquid. And people were taking up hobbies for the first time, and some people were rekindling those hobbies because they had more time on their hands. So there was a big influx of new buyers. And what we witnessed, surprisingly, was the average age of these buyers was much lower than we're used to, and there was a lot of younger buyers spending real money. And that takes us to the next thing, which is the digital transformation in our hobby, where we are now, we have a presentation later at 2:20, which if you're interested in NFTs combined with fractional ownership, my colleague Paul Simpson will run you through that. But the basic principle is we've combined the concept of having a fractional ownership of a tangible asset at the same time as having an NFT, which means that you have all the digital upside, but it's backed by a real tangible asset. So whilst the trading platform dictates the price, there's an underlying asset of value that supports what that price should be, a bit like a fund where it's either trading above or below its asset value, but that should be the marker of whether it's good value or not. But this is getting a much younger demographic interested, where you can own a part of a tangible asset rather than all of the tangible asset, and it's in a transparent third-party marketplace with an independent price, and it's more liquid to trade, and you can have a basket of assets within that. So passion investments have unique attributes that are different from every other investment. And the biggest one is that the prices are not driven in the same way as a normal investment. Pretty much all investments are driven by fear and greed. There's a whole basic concept that rising prices cause rising prices and falling prices cause falling prices. That's a general investment sort of concept. Whereas in investments of passion, that market is driven by people with a desire to own things competing against each other at an auction to secure those things that pushes prices up. And it's high net worth individuals that are driving the market prices. And because of that, it tends to be less volatile than what you would see in other investments. It doesn't generally go up by huge amounts quickly, but it also doesn't fall by huge amounts quickly. There's also the fact that inherently rare collectibles can only become rarer over time. We see things like a whole £1 million stamp collection disappear in an Australian bushfire. It's gone forever. All those stamps can never come back. Classic cars, they can't make more of those classic cars. That is the end of those classic cars. And they can get damaged, they can get lost, they can get donated to museums. but ultimately the supply side of the equation will diminish over time. There's also a real pleasure and a pride of ownership in these assets. So the clients we deal with, predominantly, they enjoy what they're doing. They get really interested in the subject matter and owning history in their hands. And that is so much more fun than investing in a company, which I do, where you're hoping that the management team are telling you the truth and the business is what you think it is, and that the government doesn't randomly regulate the industry that you invested in and destroy the company. So all those sort of fears that you have in investing in the stock market don't exist in tangible assets. It just sits there, it doesn't do anything. The downside to tangible assets is that there is obviously lower liquidity. It's not like owning shares in BP. You can't press a button to realise your investment. It takes longer to get in and it takes longer to get out. But the benefit of that is that dynamic prevents high volatility. You can't have panic selling or buying. It's just not possible. So you have significant time to see a change in the market to get out before it falls. Markets can go up and down in any market, but you have far more time to see that event coming and to get out. Whereas in the stock market, as you know, you can get up in the morning and see you've lost 50%, sort of overnight, because you can get that level of volatility. You can't get that in an illiquid market. It also has low correlation with all other investments, so it's something, as I've said previously, that can go up in value when everything else is going down in value, and it's principal investment rationale for considering this. A lot of people, myself included, use collectibles as part of a pension. So the collectibles I own personally, I intend to sell bits of those collectibles whilst I'm retired as part of my retirement fund, and I intend to hand down a lot of it to my children. And there's a lot of tax planning advantages, which I can't really go into because I'm not qualified, but if you spoke to a tax planning consultant, they would tell you there's a lot of different things you can do to mitigate your tax in this investment. So I'd now like to go through some specific categories that I would recommend right now. And the first is luxury watches. Now, the Frank Knight Index shows growth in this area of 147% in the past 10 years and 18% last year. Now, this market underwent a transformation during COVID and lockdown, and that's because Patek Philippe and Rolex factories were forced to close, so there was no new production, which therefore resulted in the growth of the secondary market. And a lot of new players came into the market and prices went up quite significantly. They did come down a bit, but they're on the way back up again. And the fact of the matter is that today, Patek Philippe and Rolex cannot keep up with demand, so the secondary market is very strong. There's also an inbuilt expected price rise in this market annually based on Patek Philippe and Rolex put up their own prices of new models by 10% a year on average, so you'd expect to see growth as a result of that. And last year, the top three auction houses reported a 33% increase in sales of watches, and there was 40 watches last year that sold for over £1 million. I mean, I've got like a Patek Philippe that my wife bought me 10 years ago, which she paid £14,000 for, which today is worth £28,000, and I've had the benefit of wearing it for 10 years. If I hadn't worn it, it'd be worth even more. So I would call this a momentum investment in passion investing right now, because it is such a strong area, and we are always sourcing to demand. We never have a stock holding, because there's such demand, we could never have a stock holding of watches. In a similar area is designer handbags, but you're really talking the top of the tree, which is Hermes, is the area I'd recommend. And the bag featured here is a Birkin bag, which the person that owns this bought it in 2009 for £4,500, and it's worth £20,000 today. The growth level is not quite as high in this area over the past 10 years, but it is rising significantly at the moment. Now, Hermes, they restrict supply, And if you wanted a new Birkin handbag, you could wait up to 6 years for that. And they also restrict each customer to only 2 purchases per year. So again, this has resulted in a huge growth in the secondary market. And people buy designer handbags as a status symbol. So it's the elite and the ultra wealthy that are buying these bags and causing them to go up in value. And again, it's a very strong area of the market. Rare coins is a staple of the collectibles market. It's been a popular collectible forever, really, and it has performed particularly well in the past 10 years, 124% growth and 8% in the past year. And an interesting dynamic in this market is that in the US, rare coins trade for a significant multiple of what an equivalent rare English coin would trade for, because the US market is really strong and they really, really believe in it. And it shows that the UK market of old coins has a lot of potential to rise significantly further. What I've always loved about coins is the fact that they go all the way back to 600 BC. So you can own incredible pieces of history in your hands, things that were around when Alexander the Great was around, or Julius Caesar, or even Genghis Khan, which is bizarre. I mean, so no Genghis Khan coins. He was anti-capitalist, obviously, and he refused to have his image on the coins. So Genghis Khan coins have a pony. He would never have his image on them. But this market is strongly supported with a huge collector base, and it also has an investment base, but the investment base is a small part of the market. And the auctions in London reported record sales last year of 55 million. So the market is really on the up. The next recommendation is actually a contrarian recommendation because it's performed particularly lousy over the past 10 years. It's down 7%, albeit it's showing some signs of recovery last year where it was up 3%. And the reason for this is due to some extraordinary events in the past 10 years in the market for rare British stamps. And that was driven largely by the company I mentioned at the beginning, Stanley Gibbons. They got into financial difficulty, and that really, really spooked the market and resulted in a flood of supply that we've never seen the likes of before. And also, Stanley Gibbons are the recognised pricing authority for stamps. And they issued new catalogues where they slashed the prices by 50% because they needed to make cash, so they needed to sell off their stock. And so the whole market effectively dropped. But it has since come back as people still have a desire to own rare British stamps. And we're now seeing prices at auction going up significantly, and a lot of Stanley Gibbons catalogue prices look incorrect. They're below market price. The interesting fact is, if you look at this market over a 50-year period, despite its poor performance in the past 10, it's still delivered 9% compound growth per annum over 50 years, which really shows you these are the sort of assets that if you put away for the very long term, they tend to deliver very well. It's all about buying the right quality and the right level of rarity when it comes to rare stamps. Poor quality stamps are worth a fraction of quality stamps. So I have strong hopes for the rare British stamp market because it's like a Warren Buffett type value investment right now. But it's now at the beginning of an upward trend, which gives me a lot of comfort that we've got good things to come, and it could rise significantly from where it currently sits. My final recommendation is in autographs and memorabilia, which is a part of the market where we're seeing the largest increase in younger buyers. Now this covers a wide area, such as Pelly's football boot, and incidentally, the price of that went up dramatically after his death, which is another element. Not sure who it is.
Not me. Over there.
It's not me.
There's a phone going on.
No, not mine.
And it's outside the room.
There's nobody.
Yeah.
How weird.
Sound to be over there.
No, that's weird. We can hear it.
Yeah.
Definitely persistent, whoever it is.
It's on silent.
Yes.
I think it's not.
It's on vibrator.
Mine's
So-
on, anyway.
This area of the
Just
market.
switch it on.
I know everyone's
Oh,
looking at each
pilot.
other.
We're off again. It works there.
Strange, isn't mine?
So autographs and memorabilia have a huge range of things. You could have Henry VIII manuscript, you could have an Oasis signed guitar, you could have Einstein theory of relativity, there's a whole range of different things. And they're real trophy assets, and they lend themselves really well to display at home. So the ultra high net worth love this sort of thing where they'll have a part of their house with a display area and whatever they've chosen. It could be American presidents or famous footballers or whatever. And we are seeing a real increase in younger buyers into this market now, and it's performed well over the past 10 years, and it performed particularly well during lockdown, and then it cooled off again, but it's looking quite strong again at the moment.
How do they do the provenance on things like that? You know,
It's about the hardest market out of all of them for provenance is collectible, out of autographs. And the basic premise is that an autograph's fake unless you can categorically prove it's genuine, and you can categorically prove very few. So the provenance behind the item is the value, not the item. The item can be lovely to look at. Now, if you're looking at a Henry VIII manuscript, these things are well documented and known, and there's reference works you can look and go, that's that one, so it's straightforward. A signed Pelé football boot is far more difficult. You'd have to be able to prove how that was signed conclusively. And even then, you don't have 100%, because obviously you could have a photograph of yourself with him. Doesn't mean that you didn't sign 100 boots after that.
Photoshop, photograph.
So it's all about provenance. Everything's about provenance in that market, and unfortunately, the provenance can get lost. We've often sold things to clients, and then they've wanted to sell them, and they've said, "Have you got the letter of provenance?" They went, "Well, I threw that away." No, it's no longer of any value, because whilst we know it's right, the market doesn't, and it doesn't matter what we know. It's only what the market believes.
Because even the football clubs, you can just go on the website and they are given its faux
Yeah.
autographs from the players. Chelsea does that.
Yeah, there's a lot of it. eBay, I think they said it's about, the FBI said 9 out of 10 autographs on eBay are fake. So you're buying on eBay because you want to pretend you've got an autograph, not because you want an actual autograph. So a couple of areas I would recommend, as much as I love classic cars, I wouldn't recommend it right now. And that's because it's obviously went up 185% and 25% last year. It sounds fantastic. There's a couple of reasons for that. One is that the storage costs are obviously significantly higher. It's not a portable asset, insurance costs are higher. But the market here is far more volatile than all other passion investments. I'd say this and wine fall into the same category where they're much more volatile. And their markets tend to beat to their own drum. They don't show any hedge against inflation. They can go down during high inflationary periods. So they seem to act totally independently. And whilst I would never say don't buy classic cars, we specifically wouldn't recommend them because they don't have the defensive quality we want to see in an investment like this. And the next one is even worse. This is the best performing passion investment in the past 10 years. And as a Scotsman, I don't know how I can possibly say I don't recommend this game. But I do. 373% growth in the past 10 years, but it's only 3% last year. It's cooling off. The market is cooling down. And the experts we've spoken to have said that the market is definitely weakening in the £5,000 plus bottom. And this market was becoming speculative. Because it was going up in value, people were buying and then flipping them very quickly for a profit. And that's just simply not sustainable. That is acting like a normal investment market rather than a collectible market. And I told you before, you get time to get out of investments and collectibles rather than it happens overnight. This would be one of those examples where if we were giving you advice, we'd say we'd recommend that you sell your investments in whiskey right now, because we can see that the market is likely going to fall next. I could be proven wrong because no one can predict the future, but that would be my my professional opinion on it.
Mm.
So,
Excuse me, what about the other drinks, like, I don't know, rare rum or, I don't know.
rum's a good one to mention because that's coming through right now.
Yes.
You'd be getting into what is pretty much a new market that hasn't really ever been recognised before, but the vintage rums are increasing in popularity. They're getting much higher prices at auction
Yeah.
than they used to get.
How far back do they go? I mean, what's the oldest rum you could buy?
I'm not an expert on rum, I can tell you actually, but yeah, I don't know.
Oh, it's
Tim
such a,
Morgan.
well, it's such a big thing in the 18th century with
I think I
slavery and all
know.
the rest of it. You know, it's,
I mean, I have some of these things. I've got like I got a 1914 bottle of cognac, which is worth a lot of money because obviously it was World War One. The Germans drank it all when they occupied France. Very few escaped, and bizarrely 1914 was the vintage year.
Mm.
But they go back to Napoleon times, you know, like that sort of thing.
utopia undrinkable.
I don't know what it tastes like, but
Well, you're not going to try.
might
What,
taste good.
what about champagne?
Champagne, yeah, it's another one that's in the sort of wine category, but
Mm.
probably got a smaller following, but absolutely, yeah. Problem with champagne, it's just so easy to drink. You know, that's the risk in an investment is you may just drink it.
Yeah.
But old champagne is pretty awful.
Yeah.
Well, the
Yeah,
ones
It
I've
ages
tasted,
well,
Yeah.
it's delicious.
I wasn't impressed. No,
Mm.
it wasn't something that I would recommend. So our job actually is to help you to profit from buying and selling rare collectibles. So we are professionals in sourcing the right items at the right price with authenticity, and enabling you to get into the market and to navigate your way through the market. And we're actually the only company that I know of that provides a comprehensive service to someone that wants to look at this as an investment rather than the enjoyment of purchasing passion investments. And the thing we take greatest pride in is that every single client has their own professional account manager that you would have a personal relationship with, and they look after you. So we're not like a bank where our account managers look after thousands.
5 minutes left.
Okay. I'm almost done anyway, so we're good. And we like to understand exactly what you want to achieve and to help you to achieve that. So our starting point is to really speak to you in detail about what you want to do, what your motivations are, what your intended returns are, and we try to build you a bespoke portfolio that matches what you're looking for. And then we can provide secure storage, insurance. You can also take ownership, physical ownership if you choose. It's not obligatory, but we provide that in G4S vaults in the Channel Islands. So there's no VAT or anything like that in any of these things. That's avoided by being in the Channel Islands. And we give ongoing advice. Everyone gets a professional valuation report annually as a minimum, but you can have a valuation update on request. You'll have access to an online portfolio that you can access at any time and see what the current prices are at will, but it's not a liquid market, so don't visit it every day because nothing will happen. And then we work with you to get the best realisation on exit, so we won't even necessarily tell you to sell it through us. If we think Sotheby's will get a better price than us at that time, we would recommend you sell it through Sotheby's. And that's all about understanding the dynamics of the market. And that is really it. I'd be interested to hear any questions